Hi, everyone. Today we have an amazing investor with us who has been with BrightTree for 15 years and is on the executive committee, which leads the firm. She focuses on investments in growth stage software companies and has made investments like Intacct, Avalara, Marketo, SaaSOptics, ClearCare, RealPage, BrightTree, Guidewire, and WebPT. Welcome to SheVC. I'm your founder and host, Gayatri Sarkar. So today's that special day. We have Chelsea Stoner, general partner at BrightTree Ventures with us. Super excited to welcome you, Chelsea.
Thank you for having me, Gayatri. I'm super excited to be here.
And I have to tell one story to everybody. It's like my first meeting, I was introduced to Chelsea by one of the LPs. And my first meeting with Chelsea was, I literally forgot about the meeting and I was sleeping and it never happened. And I suddenly remembered like, okay, I'm missing something important in life. And I realized I was not in the meeting, and she was so nice. She was there in the meeting more than 15 minutes waiting for me, just checking her emails or doing her work. So I'm so thankful, and I cannot, express in my words of gratitude.
Oh my gosh, that is kind of hilarious. I had forgotten all about that. So no worries at all.
So thanks a lot, Chelsea, for your time today. And you are one of the superstar investors who has been behind BrightTree Ventures, some of the largest exits. So growth stage investing is very competitive as more public market investors, specifically hedge fund worlds, are coming into the investing market. What goes beyond the check that convinces late stage companies to take BrightTree on capital?
Oh, yes. Gosh, so we are in a super competitive market. That is true over the last, I feel like I've been saying that though, since I got to BrightTree, frankly. So it just continues to get more competitive and more competitive. And I really I think we all take it as a challenge. We just need to get better and better. And, kind of how we do that, we've been very lucky to work with incredible entrepreneurs and teams, right? To scale companies. And I find that kind of those stories of scaling and how we helped companies do that over the years really resonates with founders. And so I think it's more of, showing kind of what we've done before and how we can be helpful to their business. And I'd also say we're very conscious about being very thematic investors. And so, we're generally speaking to entrepreneurs that we're very aligned with, right? What they're building is exactly what we're looking to invest behind. And so, if we're doing our job well, we know a lot about their market, we know a lot about their competitors, we know a lot about their challenges before we even, get on the phone with them, so to speak. So we're really speaking their language. It's a very different style of investing than, what we're seeing kind of the quick, 4-day processes these days. So we have to be, very thoughtful in how we select the areas that we're going to, do a lot of our intensive research around. But that's kind of where I see us really winning those deals because of all of the work we've put in on the front end.
Yeah, that's totally amazing. And I understand the value that you guys bring it also beyond the check. So tell us, how do you pick winners over the years? And you have been in the industry for so long, as you have research intensive, as you talked about, research intensive thematic investments that is focused on growth, buyout, private equity, and SaaS, and, especially in software. So we'd love to know that details.
Yeah. So this is maybe going to sound a bit trite, but we spend all of our time really looking for the best teams building kind of the category leader in their given market, right? And in the key areas that we have identified, again, in our themes to go after. So it means that we're really focused on finding product market fit. And all of the signals, right, that goes around really understanding if there is product market fit. And so, it's a lot of market research work, right? It's a lot of talking to customers. It's a lot of talking to the market to really understand the true differentiators that this, particular company might have. We don't outsource those calls like a lot of firms are now doing, because we know there's just so much nuance to glean. So I make it a point to be on all of those calls to really listen for the nuance that comes out. So again, looking for signals, and it comes through in the metrics as well. So really understanding the unit economics and the metrics and what kind of signals we can take from all of that. It's effectively like putting together a puzzle. And so, which is the fun of it, right? But that's kind of the core, I'd say, of the battery investing style, is really around identifying product market fit.
Yeah, that's amazing.
Does that make sense?
Yeah, no, absolutely. And so you sit on this amazing company's board. So can you share some of the learnings that you have being on the board of these companies, and what tips do you want to share to the startup founders that are raising their growth rounds?
Yeah, it's I guess I would say pick your partners, right? And so many companies, especially now, do have that luxury to be able to pick their partners they want to work with, because it's a long, hopefully a long ride. And so it's all about, what do you want and need in a new partner in this phase? Is it just capital? Some people, some companies just really want and need the capital. They have a very good board. They have all of the skills around them. But some others need different skills. How are you planning to spend the dollars? If it's to scale outbound sales, has this particular partner done that before? How can they be helpful? Will their network help drive revenue? Or maybe it's just, they want to work with really nice, good people, right? And so there's just, I think it's really understanding what the company needs and what that particular CEO needs in a partner. And then I'd say, do as much diligence on them as they're doing on you, which it's so interesting, but it's something we generally don't see a lot of. I'm always saying, gosh, call all these CEOs who I've worked with before, and they can, probably tell you what it's like to work with me a lot better than I can. And I don't know that there's a lot of deals are happening so fast these days. So I don't know if there's a lot of time to do that, but I always encourage our companies to go through that process to really understand the partner.
Yeah, that's so important, because it's like a marriage. And
yes.
Can you, and I know you talked about this, can you elaborate on the new market opportunities, especially in the private growth companies, and how the market changed? I mean, we just started a little bit discussing about this, 4 days due diligence or lesser than that process, and considering like the focus on SPAC, though it has changed a little bit in the last few months because of SEC
Yes.
regulation, but I would love to know, especially because the growth investments have changed a lot. And also it's a high impact asset class, especially on the technology side. But at the same time, private companies are staying longer private.
Yeah, because they can. I mean, it's kind of like, do you want to be a public company, right? And under that spotlight, reporting short-term numbers. So it's been interesting, right? The last 5-6 years, where the private markets have become, I wouldn't say more efficient, but as efficient as the public market. So, companies haven't really needed to go public. And I don't see that changing anytime soon, right? There's just so much liquidity in the market, so many people looking for yield, given the interest rates are very low. And the Fed has said that that's not going to change, at least for the next kind of 2 to 3 years. And so I I don't see it probably changing anytime soon. I think there is kind of everybody knows how great the SaaS kind of business model is. That story is out there now, and so more folks have gotten comfortable with investing in this world. And so I just go back to, we just need to be better and figure out kind of our spots to go find alpha. And I think that's the really, really nice thing about Battery is, we're effectively one fund able to invest across stages. So in one particular market, we might say, gosh, that's a really great place to do a very early stage deal, right? There's a lot of innovation coming, that makes sense. Or in some particular market segments, it might be better to do a less risky, kind of more mature company deal. And so we're really the software experts, if you will, and we can kind of go across the span based on where we're seeing competition and things happening from that perspective.
Yeah, that's so true. Now, do you see non-institutional investors moving into late stage investing, since the small cap public equity market is shrinking and there's so much of secondary opportunities coming through SharePost and others?
Yeah, so I guess what's your definition of non-institutional? Like who are you kind of seeing there?
Yeah, like family offices or super high net worth, ultra high net worth individuals. Yeah.
Yes. Yeah, no, for sure. I think, again, that's a trend that will likely continue as more people get comfortable with the model, as things like SharePost make it a lot easier to do. And so, it's just competing at a different level, right? They're more likely to buy secondary shares versus primary into the company. I've not seen any family offices get aggressive at least in the growth stage. Now, I know there's a lot of seed and early stage opportunities that they get excited by, but not kind of in the growth stage, at least yet.
Yeah, that's good to know. And you talk about this in your blog that you, especially looking at the portfolio companies that are outside Silicon Valley, Boston, New York, and you have already partnered with a lot of local VCs like Canal Partners or Arthur Ventures. I would love to know about, talk about those partnerships with early stage or mid stage VC funds, and how are you enabling, outside the Silicon Valley, outside the coastal region entrepreneurship community?
Yeah, I mean, first of all, I think there's great people and great businesses everywhere, and I think especially with COVID, we'll see even more proliferation of that happening, right? And I think it's a really, really exciting time in software in general, and to be an entrepreneur building a company, a software business. So the kind of local firms, like all things, it just came organically, where we had really done again our thematic work and identified interesting companies, and one is WebPT, which is down in Phoenix, Arizona. And crazy story, they only raised $1 million onto the balance sheet and ended up building 100 million plus ARR business off that $1 million. So talk about just like incredible disciplined growth, right? Cash flow conversion of this business. And that investor was Jim Armstrong of JDA Software fame, the founder there. He's just an incredible person. But he took, his, all the wealth he created at JDA and started a venture fund called Canal, and invested in the local community. And WebPT was one of the firms that he invested in. And so we got to know him through that process. Ended up, investing in WebPT, ended up being on the board with him. And so now, looking at a lot of, other of their companies that they invest in, they're very, very good. And so that's been fun. And he is, very, very much a local investor. Arthur Ventures, same. That's again kind of a similar story, which is interesting. Doug Burgum started Arthur Ventures. Doug was the founder of Great Plains Software. He literally bet the family farm. He grew up in around Fargo, North Dakota, which is actually kind of close to where I grew up in northeastern Montana. So we had that connection. But bet the family farm on building Great Plains Software. So like super interesting story. Ended up selling it to Microsoft. But on that one in particular, we had just invested in Avalara, and Scott, we're kind of building out the board and understanding what Scott would be excited, who he'd be excited to work with from another. We always try to get sort of other executives or other managers, founders who have been through their exact same scaling process before. And I just asked him, who's kind of the top of your list? Who would you like to work with, and who have you, seen do this before? And he said, Doug Burgum. I'd love to get him around this company. And so I made it my mission to go find Doug Burgum. He was chairman of Atlassian at the time, and Atlassian happened to have their conference in San Francisco. And so I went and kind of stalked him and said, I have this really awesome company, this amazing CEO, and you need to meet them. And the rest is history. So he came on the board for a short time there. So that's how we got to know Arthur. And again, they do really great work investing, North Dakota, kind of Minnesota, local businesses.
That's amazing. And, continuing on the journey regarding your blog, you talk about how you find startups from Midwest or Southwest, they're bootstrapping, they're more scrappier, hungrier, more focused on the bottom line financials. And they also feel like underdogs because they're trying to compete with better funded startups, from the coastal regions. And these startups are actually often succeeding. I would love to know, especially with COVID-19, how the marketplace has shifted. Where are the opportunities that you are seeing specifically for Midwest and Southwest startups?
Yeah, I think, again, I think the gig is up there because it made it very easy, that kind of the little secret is a lot of people who live in the Valley, I should say a lot of investors don't love to travel. And because why would they need to? There's so many amazing companies here, right? And so, but of course, during the last 15 months, nobody's really had to travel. And so it enabled them to meet these businesses outside of our local area here. And I think probably, gave a rise to just how great the talent is. And so, yeah, it's good and bad. I am a big supporter of those businesses. Bad news now, I have a lot more competition because people know how great they are. And so, no, I do think that the competition has increased. We've seen it, the last 15 months. And again, it just goes back to you really need to be selective in where we spend our time and, make sure that we can be as helpful as possible to those businesses and really win them over.
Yeah, that's amazing. And since we are talking about being selective, do you think your risk profile has changed over years? And specifically, I want to talk in terms of, time diversification and venture when you're thinking about, venture capital portfolio construction.
Yeah, it's a good question, and a challenging one in one respect. I think, of course, looking at all of the data, certainly vintage year matters, right? At least that's what the data would suggest. But kind of our job is to find the best returns, the best risk return, right? In the market in which we're currently operating. we're playing the game on the field, right? And so from kind of the biggest macro perspective, again, in software where I focus, the trends are just, very compelling, right? I mean, we've been lucky, multiples have been up and to the right. We've been in a bull market for a long time. But the underlying trends driving that around software, I don't see that going away anytime soon. And so, if you feel really good about the market being there and there's going to continue to be a need for this software, then it becomes a question of, okay, what about multiples, right? Where are multiples going to go? And again, we've benefited significantly from multiple increases over, for the most part. There was a little dip, in 2008 to 2010, but for the most part, they've been up and to the right. And we spend a lot of time, especially the last 15 months at Battery, really, trying to put a framework together of, where do we believe long-term multiples are going to be, right? And all of the kind of drivers around multiples. And because, we've seen a few, again, in software land, in SaaS land specifically, we've seen a few re-ratings up of multiples. I remember, going back to 15 years ago when I first started investing, there weren't a ton of SaaS companies. It was really kind of the founding of it. And, we would see multiples were in the kind of 3 to 4 times ARR range. If we brought forward a deal at, 5 times, it was just crazy town, right? And now, 5 times would be a wonderful, especially for growth. Of course, there's a lot of factors that matter. But, I guess, taking a giant step back to address your question, vintage year certainly matters, but trying to overlay on top of that the different drivers of returns and really understanding and having a framework of really understanding what those are, so that we can be ready and make thoughtful decisions around, kind of each of those individual investments that we're making.
No, I totally agree with you. Now with COVID-19, last year we saw the market tumbled and took a sharp recovery. But we found venture capital portfolios are doing better returns compared to public market, and tech stocks are the ones that are rallying higher than the other sectors. So being an investor in the technology area, where do you see the future of growth investing is?
It's a loaded question, because I just go back to, all of the trends are there. There's no shortage of liquidity. That's probably going to increase, not decrease. At the same time, that the number of businesses should increase as well, right? Given it's a lot cheaper to start a software business than it was even 5 years ago. The kind of key component, and I think, a lot of our companies are wrestling with this, kind of what's the bottleneck, right? And the bottleneck is going to be, and we're seeing it, like I said, labor, right? Especially now with, are people going to be able to work remotely in perpetuity? What does that mean to the labor pool? And we are starting to see a lot of our companies not be able to hire as quickly as they'd like to drive growth. So growth investing, it's certainly not going to become less competitive. I struggle with that. We just need to be sharper and more thoughtful. We have the benefit of being able to go, a bit earlier in our fund or a bit later, and kind of find the gaps, right? Find the alpha, where others, maybe are kind of more boxed in given their particular strategy.
No, I totally agree with you. And this is my last question. I cannot believe you're almost coming to the end of this interview. It's a very personal question. It's especially with COVID-19 and now San Francisco has opened up. We saw the work-life diffusion. And do you think that there's a paradigm shift in your life, how you're going to work, and there's a like lifestyle balance that comes with it? I would love to know what's your thought on that.
Oh my gosh, Gayatri. So I have to say the last 15 months, I've probably worked more than I ever have before. And that might be true for all of us, right? And so, gosh, I mean, work-life balance, I almost feel like I had it a bit better before. But no, there's so many joys of being, so I have two kids, a 10-year-old and a 12-year-old, and a great husband, and being able to have dinner every night together as a family, and the debates, and it was so amazing over the last 15 months. I don't want to give that up, right? I know I have to. I know I travel quite a bit, right? Since I'm not investing, so much around here. Does that change? It probably changes a little bit. I think we proved that we can do a lot of our diligence work over Zoom. But what you can't really do is build relationships. And so that part of the job, I do, strongly believe needs to be in person. And so, yeah, I guess we'll kind of find out what the new normal has in stock. I did take my first trip since, the beginning of March in 2020, which was kind of nutty. I went out to Atlanta and spent some time in Texas last week, and it is kind of a different world. Flights are super crowded, airports are very, very bustling. And so I think, just seeing people kind of get back to normal was good. But yeah, the question around, and this is something, the work-life balance and kind of, what the, office policy is going to be, something that all of our companies are asking themselves right now, right? Is it going to be 2 days a week remote? What? So I think, each company needs to kind of figure it out. Culture is a big deal, right? And so what we're asking ourselves is, how do we continue the culture and build the culture that we want, while still, allowing kind of this new remote work lifestyle balance that we have.
No, on that happy note, I'm so thankful we came to the podcast, and this is a great episode, and I really enjoyed making this.
Thank you, Gayatri. Thanks so much for having me. This was
Yeah,
fun. Good questions.
absolutely. Thank you very much, Chelsea, for your time.
Likewise.